Hi, I'm Tim Merel from Digi-Capital. We're an AR and VR intelligence firm. So we do three things. We've got our reports, which are over 370 pages long and come out quarterly on the industry. Our AR and VR analytics platform with over 500,000 data points that you can see on the screen behind me. And lastly, strategy consulting. Today, we're going to talk about how COVID-19 could change AR and VR's future. COVID-19 is affecting billions of people worldwide in fundamental ways. And by comparison, AR and VR and any early tech industry is trivial. Nonetheless, AR and VR companies are experiencing both positive and negative impacts from COVID-19. And we're going to explore a bit of what that looks like and how that might change things. So I'll start by looking at some of the factors which are going to have an impact. And again, there are far more factors that are having far more profound impacts than what we're going to talk about here. The first is physical lockdowns. Now, on the face of it, this should be a good thing for AR and VR. And in some ways, the number of use cases, folks getting together remotely, businesses trying to work with their teams both internally and externally, and other collaboration, good things for AR and VR. But there are some impacts that may not be quite as positive. The second is bricks and mortar retail closures, which again on the surface look like they should be a positive for the industry because of what you can do remotely, particularly around e-commerce. But even there are some impacts that aren't quite as positive. The third, and I'll continue with the theme of e-commerce, is essential e-commerce delivery limitations. And in some markets, already giants like Amazon have had to restrict what they deliver based on either government or other restrictions. And so that does limit some of what can be delivered to more essential goods. Then there's supply chain disruption, whether it be supplier, manufacturer, distribution, wholesale, or retail. There have already been impacts in relation to the disruption with hardware selling out, with some things being delayed and so on. And so that supply chain piece is a fairly important one, particularly around the hardware side, but also software. And then lastly, and in many ways, this could be the biggest one, both short but particularly medium term, recession and depression economic impacts. At the end of the day, if you're having to make a decision between putting food on the table or paying the rent and buying something online or having an in-app purchase, well, it becomes a very difficult decision to not go with what you absolutely have to do to feed your family and to put a roof over your head. Now, the industry is already very diverse. There's a lot of different parts of the industry, and everybody's being impacted in different ways. What I'm going to do is look at those 5 factors I talked about before and look at the broad general brushstrokes of the impacts that they're likely to have on the different sectors. And in that regard, I'm going to do this in terms of the major business models. So hardware sales, ad spend, e-commerce sales, enterprise, software and services, app store, location-based entertainment, and video. So let's start with hardware sales. Now here, lockdowns are a big positive. There's been very high demand for, in particular, VR hardware to deal with this. Even though actually there have been a lot of stockouts, really through the first quarter of the year. So that's, as a demand driver, lockdowns are a positive, even though they're a negative in general for most folks. But bricks and mortar retail closures are a negative in relation to hardware because folks either can't, particularly if they're not already in the industry, can't go and try headsets or might not be willing to try something on their face in a public space where devices are being shared. E-commerce limitations, again, where they're applicable, it's hard to argue that an AR and VR headset is an essential item, even though it's very, very useful. The supply chain piece has already had an impact with folks like Facebook with Oculus Quest having stockouts, and that's partly due to supply chain, where they've had high demand, but they haven't necessarily been able to provide them. And they're dealing with that, and now we're seeing some more stock coming through. But the recession piece, it's hard to tell in terms of the hardware sales piece. There's definitely demand, but if the supply is limited, if it's hard to get to folks, and if they, at the end of the day they have to make a decision, well, what do I spend my money on? It's not clear yet what the impact is going to be on hardware. So overall, in the short to medium term, we're taking a negative view compared to pre-COVID-19 on the hardware sales part of the industry. The next is ad spend. Now, again, lockdowns, on the face of it, look great in terms of providing folks who are spending more time using AR and VR apps. Particularly if you think about the social side of things, we're seeing very high uptake and really things going up enormously for apps like TikTok, where they're using AR effects. So that's been very positive. So, however, on the demand side, in terms of there being more eyeballs, more folks who can see stuff, there's more time, more dwell time. While that's positive, the rest of it doesn't look the same. With bricks and mortar closures, you've got an entire class of advertisers who can't afford to advertise. There's nothing to advertise because their stores are closed. And that affects a whole range of different sectors, not just AR, VR. E-commerce limitations in terms of delivery. Again, if you can't actually deliver a product to a customer, then you're not going to be advertising it. So that takes some more folks out of the market. The supply chain disruption piece is again strongly negative, and this is broadly across the piece. Any company, any industry whose supply chain is disrupted, well, if you can't get product to market, if you can't distribute it, if you can't sell it to people, then again, you're not going to be advertising it. And lastly, the recession piece has already seen folks like Facebook and Google have the forecasts for their advertising revenues for at least this year being downgraded. And we're already seeing impacts from that. So in the round for ad spend, again, compared to pre-COVID-19, we're taking a negative view on the impacts for AR and VR ad spend. The next one is e-commerce sales. Now, lockdowns, definitely a positive. If you can't go to a store, you're going to be buying stuff online. Folks feel much more comfortable, and AR has already shown with folks like House that it can dramatically increase the propensity of folks to buy using AR with mobile AR apps. So that's excellent. Bricks and mortar closures, again, a positive for e-commerce sales because, well, if the physical store isn't there, in many ways there have been trends from bricks and mortar to e-commerce that have now been accelerated by years, if not decades, by the crisis. However, e-commerce limitations fairly clearly are an issue, and obviously if you can't sell stuff, deliver stuff, get it to customers, that's a problem. The supply chain issues affect e-commerce as much as any other form of retail. So again, that's an issue for e-commerce sales with AR and VR. And lastly, the recessionary impacts. While there's been very high demand for AR, VR hardware and so on, when it comes to the medium term, if you're, again, having to make those sorts of trade-offs between what you need to look after yourself and your family and buying a new headset, it becomes a lot harder to justify doing that. But because there's both positive and negative sides, we're taking a neutral view on e-commerce sales for AR and VR compared to pre-crisis. The enterprise piece is interesting and has been heralded by many folks as being accelerated dramatically by COVID-19, and that is true to a degree. When it comes to the lockdowns, clearly if you can't have folks in the office, having remote collaboration is hugely important. Obviously, AR and VR are a very good thing when it comes to that. When it comes to bricks and mortar closures, it's kind of neutral. At the end of the day, enterprise buyers aren't necessarily buying their gear from retail, so that might be less of an issue. E-commerce limitations, however, are negative. Even if you want to get the new tech to your team, if you can't actually get it to them, can't get it delivered to them, well, that's a problem. Then supply chain issues, similar to the others. Again, if you have supply chain issues, you can't get the tech to folks, that's a problem. And lastly, and in many ways, this is probably the big one here, the recessionary impacts. Outside of AR and VR, we've already seen a lot of cutting of budgets by CIOs. So while there's been a prioritization towards collaboration, remote working tools, anything which is project-based or early stage is at risk when it comes to the CIO's view of what they need to do. And so because of the relatively early stage of enterprise AR, VR, it has that risk as well. Put all these positive, neutral, and negative factors together in the round, and we're taking a neutral view on enterprise compared to before. App stores, early on, have done very, very well. We've seen big upticks in revenue for a whole range of AR and VR folks. So whether it be what's been happening with Half-Life, with Alex, whether it's been what's happening with Pokemon Go, it's been a big positive, definitely a plus in the short term. The other factors are a mixed bag. Bricks and mortar closures and e-commerce limitations shouldn't have much of an impact. But supply chain issues have already seen AAA VR games being postponed because of the inability to actually get everything lined up that's necessary to be able to get that software out there. The recession issues, again, it is a little bit early to tell right now. We've seen some very positive big uplifts in terms of spending and usage, but whether that can countervail people having to make that fundamental decision about what they have to spend on and how they spend it, it's too early to tell. So as the rest of the year progresses, we'll keep a close eye on that. So in the round, for app stores, we're taking a neutral view. Location-based entertainment is probably, in some ways, the most difficult sector in relation to AR and VR from COVID-19. Lockdowns have been a bad thing for anything that has to do with retail, where the public goes. And so when it comes to location-based entertainment, most venues have closed their doors for now, and there's an open question about the psychology of when people will go back to location-based entertainment in the round, not just AR and VR, somewhere where you're close to other people, you're touching and using things that other people have touched. But when you're going somewhere where you have something that you put on your face, that somebody else has put on their face, it's not clear as to what the psychology of that's going to be, even if the practicalities can be overcome. So that's a challenge. E-commerce limitations and supply chain limitations, well, there are bigger things for location-based entertainment folks to think about at the moment, but still they're negative. And lastly, the recessionary impacts. If you think about discretionary spend, it's harder for folks to say, I'm going to go out and go to see a film, or go out to go and go to location-based entertainment. Again, not just AR, VR. So again, the recessionary aspects are a negative. So in the round, we are taking a negative view on location-based entertainment, both short and medium term, and we're hoping for a recovery in the long term. Lastly, with video, the positives, again, lockdowns have seen a big spike in terms of video usage. So that's a good thing for 360 video and so on. When we're looking at bricks and mortar closures, even though it's probably marginal, the closure of multiplexes is probably a good thing for VR video. So again, it's a 360 video player, whether they be live or animated or pre-recorded. E-commerce limitations, probably fairly neutral. Supply chain is a negative if you're doing live video. In other words, if you need to get actors together, that's kind of a problem. And it's also a particularly issue for live sports. So that's been quite a promising area for 360 video. If the sports aren't being played, then you don't have the content to put through. But if you're an animation studio and you can get around the supply chain issues and you can get remote working to work for you, then actually you're in a good place. Lastly, the recession piece, it's hard to tell in terms, and we haven't really seen a lot of short-term data yet, so we're keeping a very close eye on that. So in the round, we're taking a neutral to slightly negative view on VR video. So what does all of this mean for augmented reality? Now here I'm going to use some screen grabs from our analytics platform. This is the free charts here don't come from the subscriber version, so you're not going to see the numbers, data, and axes you would see there. But I'll call out numbers as we go along. If we look at active installed base, we see steady growth. It's definitely climbed as a result of COVID-19, and we anticipate the ongoing growth path to stay broadly similar. And this is driven very heavily by messaging-based mobile AR, as well as OS-based mobile AR. Smart glasses, obviously a much smaller install base now, and forecast to remain much smaller, but we still see the total market, again driven heavily by mobile AR active install base, going over 2.5 billion by 2024. So it's a very positive message there. We don't see a huge downside in relation to that. On the revenue side, it's a slightly different picture. Broadly speaking, we see still see growth, but we see the growth having come down quite substantially in the last, for the next 2 years, so for 2020 and 2021 versus our previous forecasts. The big question remains, will Apple launch smartphone tethered smart glasses? In our forecasts, we forecast now for late 2022. But at the end of the day, as we've said many times before, only Tim Cook and his inner circle really know if and when that's going to happen. If it does, it changes things dramatically. The drivers there from a revenue perspective, ad spend, again, largely on mobile AR messaging platforms, but most mobile messaging platforms with AR lenses, hardware, e-commerce, enterprise app store, and location-based entertainment. And what about VR? Well, with VR, where with AR we forecast the market reaching around the 60 billion revenue mark by 2024, with VR we now do not see an inflection point in coming years. We see steady growth. We think that it could take up until 2023 for VR's active installed base to pass 10 million active users. But look, it's still a positive, but it's not on the same scale as AR. When it comes to the revenue piece, we forecast that VR could be around the 6 billion mark by 2024. So not the same order of magnitude as AR, but still a good, strong, healthy growth rate. So how does all of this change AR and VR's economic future in the round? We forecast 1.5 billion to 2 billion less in 2020 and 2021 versus pre-crisis in the round. So each year it's down quite a bit on where we thought it would have been before the crisis happened, and that's taking into account all the factors above. However, it's really worth noting that growth is still forecast for this year and next year, the difference being it's going to be at a slower rate than it would have been before the crisis. And again, AR/VR is not alone in this. This is the case for any early stage technology industry at the moment. So in the round, put it all together, and we forecast AR and VR revenue combined of around 65 billion by 2024, which, if it ends up happening, and again, we'll all really know when we get there, is a good, strong figure to aim for. Now, that was looking at the revenue side. Let's look at what's going on in relation to investment. Now, AR/VR is not alone in the tech market. Overall tech market investment has gone down in a range of sectors, and VCs are being much more cautious in the light of what's happening at the moment. That's affected a whole range of things. For AR/VR specifically, investment levels in the first quarter of this year were at pre-Facebook and Oculus levels, so really down substantially on the last few years. And there's no way of avoiding that. It's just the nature of where things are currently. We're going to have a look at some of the deal flow, again, extracted from our analytics platform. If you look at investment volume, the number of deals by category, you can see the pattern fairly clearly, and you can see how we've effectively gone back to late 2013, when it comes to the number of deals, so volume. When we look at it by stage, again, it's come down dramatically. We're seeing activity in seed, we're seeing activity in accelerators, we're seeing more early stage activity than we are late stage activity at the moment. When we look at value, the dollars invested, it's a different picture. And again, there have been some very big spikes when there have been large investments into smart glasses, and we know who's taken a lot of the revenue there, a lot of the investment there, and also investment into core tech. And really the core tech space, particularly in China, has been a big area for investment by VCs over the years. But again, if we look at what's happening most recently, it's really down to really not that long after the Facebook Oculus deal really sparked VC investment. So when it comes to the number of the actual amount of dollars invested by category, it's down across the board. If we look at investment by stage, similar picture. The dollars that are being invested that are larger have been in a few late stage rounds. So where, as opposed to deal volume, number of deals, it was more early stage, the actual dollars have been veering towards the late stage with companies that are already showing traction. And so we've seen a few very strong companies continuing there. When it comes to the country way of looking at this, where's the money going? As in the last few years, and this is the last 12 months, most of the money has been going into American and Chinese startups. There's been investment elsewhere in the world. There's been some in Europe, but really America and China dominate as they have for some time. When we look at the exit market and look at acquisitions, M&A, at the end of the day, AR/VR has only had a few deals per quarter. Really, for the last few years, it hasn't really gone up much, and that highlights the early stage of the market. With what's happening right now, we've generally seen the actual investment value being in the tens to hundreds of millions per quarter. So we don't see an immediate catalyst for large-scale M&A. Again, if Apple enters, and again, only Tim Cook and his inner circle know, with smartphone tethered smart glasses, that could change this picture. So where to from here? Well, there's no sugarcoating it. It is going to be a difficult time for AR/VR, as it is for most of the rest of the world. And again, AR/VR, by comparison to what's happening in the real world, is tiny and trivial. It doesn't matter in comparison to folks dealing with impacts on their lives or losing their lives. But there is hope. It isn't all doom and gloom, and our view is that the next 2 years will be one for the strongest startups to really focus on revenue generation and managing burn rates, perhaps not being able to rely on as much of VC investment as they would in normal times, and these are not normal times. But the strongest startups, we hope, will find a way through to the other side, and from there, we'll go on and build the industry that we know that they can build. Thank you very much.